Hello! In this video, we will summarize the standard IFRS 8 operating segments. Welcome! I am Sylvia, the founder of IFRS Box, the place to be if you want to learn and understand IFRS easily. I have created the IFRS Kit, my premium course full of videos, Excel files, examples, and other useful materials, so check that out at ifrsbox.com if you need to. But let's focus on IFRS 8 now. IFRS 8 has been issued in 2006 and its effective date was 1st January 2009, so it has been in place for some while and it was later amended by some improvements. The core principle of IFRS 8 is that an entity shall disclose information to enable users of its financial statements to evaluate the nature and financial effects of business activities in which it engages and the economic environments in which it operates. So segment reporting under IFRS serves as a sort of reconciliation or a connector between management reports and financial statements. Based on segment reporting, also the external users, not only management, will be able to identify which segments perform well and which don't perform and other information. For some entities, IFRS 8 is mandatory, but some entities don't have to apply it. So, who has to apply IFRS 8? Each single entity in its separate or individual financial statements, and each group in its consolidated financial statements, whose debt or equity instruments are traded in a public market, and that includes stock exchange and over-the-counter market, or that files or is in the process of filing the consolidated financial statements with a Securities Commission or other regulatory organization for the purpose of issuing any class of instruments in a public market. What is the operating segment under IFRS 8? It is a component or a part of an entity that may earn revenues and incur expenses from a business activity in which it is engaged, and this includes also revenues and expenses relating to transactions with other components of the same entity. The segment's results must be regularly reviewed by the entity's chief operating decision maker, who makes decisions about the resources to be allocated to the segment and assesses its performance. And this chief operating decision maker is a function, not necessarily a person. So it can be management board, CEO, CFO, or division manager, or someone else. And discrete financial information must be available for that segment. So the example of segment might be a product division or a branch located in some particular area, or even a subsidiary company if our entity is a group. Also, a segment might not need to generate revenues yet. Therefore, also a startup that has not generated any revenues is a segment as well, if it meets the other criteria. However, not every single part of an entity is an operating segment. For example, headquarters office. It usually doesn't earn any revenues from the business activities or earns just incidental revenues, and therefore it is not an operating segment because the business activity is important here. Now, the segment might not necessarily earn revenues from external customers, and therefore even if the segment provides only the services to other segments of the company or makes products for other segments of the entity, it is still the operating segment, and typical example is when a parent has a subsidiary in some country and that subsidiary makes some products and sells fully to the parent company. So which segments to report and which ones to ignore? IFRS 8 defines so-called reportable segments. And reportable segment is each segment that meets two criteria. And the first criterion is that the segment has either been identified as a segment, in other words, it meets the definition of a segment, as we just mentioned, or results from aggregating two or more segments based on certain aggregation criteria. So even if one component does not meet the definition of a segment, it can meet it together with some other segment. So two or even more segments can be aggregated into a single operating segment if segments have similar economic characteristics and they are similar in each of the following respects: the nature of products and services, the nature of production processes, the type or class of customer for their products and services, the methods used to distribute their products or provide their services, and, if applicable, the nature of the regulatory environment, for example, banking, insurance, or public utilities. At the same time, the second criterion must be in place. It exceeds any of the quantitative thresholds as follows. Its reported revenue, including both sales to external customers and inter-segment sales or transfers, is 10% or more of the combined revenue, internal and external, of all operating segments, or the absolute amount of its reported profit or loss is 10% or more of the greater in absolute amount of either combined reported profit for all operating segments that did not report a loss and the combined reported loss of all operating segments that reported a loss. And the absolute amount means that you do not take plus and minus into account. The third threshold is that its assets are 10% or more of the combined assets of all operating segments. And here are a few more rules related to operating segments. If some operating segment does not meet any of the quantitative thresholds, it can still be considered reportable and separately disclosed if the management thinks that the information about the segment would be useful to the users of the financial statements. The second thing is that if the total external revenue reported by operating segments constitutes less than 75% of the entity's revenue, then it is necessary to identify additional operating segment and report it until at least 75% of entity's revenue is reported. And here there might be a practical problem that the additional segments are small and their number becomes high. So there would be unnecessary detail and the user will be lost in a too detailed information. Well, in this case, if the number of segments is greater than 10, the entity should really consider if the practical limit was reached. Information about other business activities and operating segments that are not reportable because they do not meet the reportability criteria shall be combined and reported in all other segments category. Another important consideration is that when the management identifies new segment as a reportable operating segment in line with the quantitative thresholds, then the segment data for a preceding period presented for comparative purposes shall be restated to show the new segment as a separately reported segment in the comparative period. So let me illustrate a bit. In the previous reporting periods, 3 segments were reported separately, and all other activities were grouped under the heading all other segments. So total revenue was 55. So we don't have the full profit or loss statement here, just the revenues. Now, in the current reporting period, managers tested quantitative thresholds again and found out that the segment number 4 became reportable. So as you can see, in the current reporting period, 4 segments are reported separately and everything else is under all other segments. Total revenues are 70. So in this case, under IFRS 8, you need to restate previous reporting period and show segment 4 separately as here. So as you can see, revenues for segment 1, 2, and 3 remain the same. Also, total revenue remains the same, 55, but the revenue for segment number 4 was reported separately. It was moved from all other segments. You can also know that the revenue for all other segments decreased from 10 to 5 because the remaining 5 were revenues for segment 4 in the previous period. Okay, so once we have identified our operating segments and we determine which segments are reportable, we need to make appropriate disclosures about each segment. And they can be classified into 4 categories. Number 1, general information. Number 2, information about profit or loss, assets and liabilities. Number 3, reconciliations. And number 4, entity-wide disclosures. Let's start with the general information. Here, under IFRS 8, you need to disclose factors used to identify the entity's reportable segments, especially the basis of organizations. Then judgments made by the management in applying the aggregation criteria. And finally, you need to report types of products and services from which each reportable segment derives its revenues. The second category of the disclosure is information about operating segment's profit or loss, including specified revenues and expenses, segment assets, and segment liabilities. This is probably the most important disclosure because here you're actually showing the numbers to the users. And the main rule is that you should show the segment numbers to the external users on the same basis as you reported them to the chief operating decision maker. And therefore, except for basic numbers of profit or loss, assets and liabilities, you should disclose separately the following amounts if you included these items in segment's profit or loss reported to chief operating decision maker, or you regularly report them somehow to him. And here you can see them on the screen. On top of it, you should also provide an explanation of the measurement of segment profit or loss, segment assets, and segment liabilities for each reportable segment, and especially the basis of accounting, the nature of any differences between the numbers reported in segment information and total numbers in profit or loss, and you can see all the necessary disclosures here. The third category of the disclosures is reconciliations. Reconciliations are explanations of the relations between individual numbers per segment to total numbers. And as a minimum, you shall reconcile revenues, profit or loss, assets, liabilities, and every other material item of information with corresponding amounts. And finally, the fourth category is entity-wide disclosures, which means that these are not at segment level but at an entity level for all the segments. Here we have three subcategories. First, information about products and services. And here you report the revenues from external customers for each product and service or groups of services. So if this is not available and the cost to produce this information is excessive, then you can skip this. Then you should present information about geographical areas. And again, if this is not readily available and the cost to produce this information is excessive, then you can skip this disclosure. You should present the information about the revenues from external customers based on geographical locations and certain non-current assets, again based on geographical locations. And finally, you should present the information about major customers and especially whether the entity relies on its major customers. So if the revenue from transactions with a single customer amounts to 10% or more of the entity's revenues, then you should show this fact and disclose the total amount and the related segment. So this was the introduction to operating segment reporting as arranged by IFRS 8. And if you need to learn more about this topic and see some examples also on other IFRS topics, you are very welcome to check ifrsbox.com, subscribe to our free newsletter, and learn to apply IFRS in practice. Thank you for watching. Bye.